So it's always my pleasure to have Vinny as one of the Fireside Chats. Vinny's been widely called the Oracle of Bitcoin because he's been so right on his price predictions over the years, and also just his medium is a must-read, even though you sometimes go long times between posts, but then you'll do like 3 in a row because something you're passionate about hits you. So Vinny, you can certainly read in his bio, has been doing so many things in the space, kind of like Brock. It's sort of a, it's like 5 people, stuffed into one entrepreneur. So I first met Vinny in early 2013 at where many of us met in San Jose. You were, of course, in the space already a bit before that. And San Jose, of course, the first Bitcoin Foundation conference, 1,000 people. There had previously never been more than 70 people in a room to talk about Bitcoin. And I've told this story before, but like there was one sort of like little kind of interactive group where people were predicting the price of Bitcoin, and it was around $120 that day. And people were like talking about what it would be at the end of the year, and a number of them were, I think the consensus was somewhere between like $200 and $300. Some people thought it was going back to 50, which had just been a month or two earlier after the pump to the rapid rise to 270 or whatever after the Cyprus sort of issues. And then you were the one person to say $1,000, and you were the one who was right. So what made you say that back then? And sort of, why don't you give me just a quick charting of, how you've seen the price since then? Because you were also the first to really predict that it was going to fall when people started bringing merchants on board.
Yeah, so, I mean, this is going way back. This is 2013. I got to refresh my memory.
5.5 years. Yeah,
5.5 years. Yeah, I can't remember what made me say that, but look, it was clear that you could just look at the size of the conference, how many people were interested in where it was going, and the conversation I was having. I mean, look, at the time, Bitcoin, there was 11 million coins out there or something, so the inflation rate was still pretty high, but the demand was clearly exceeding supply. And and I was running Gift at the time, so we were looking at the trends in terms of consumers spending Bitcoin to buy gift cards and where that was going. And then when merchants were coming online through BitPay and Coinbase and whoever else, obviously it's selling pressure. Merchants aren't holding onto the coins. We did, a large number of them, but merchants sold them back in the market, so that didn't really didn't really help with the price because they would be selling them. So I think it was just a bit of insight from running a Bitcoin-related business and being in the industry.
You were one of the, and obviously you had exits before the Bitcoin space. You've been a serial entrepreneur since your teens.
Pretty much.
And so, but your exit to First Data Corp, right? It was about 60, 70 million or so, and really one of the first significant exits in the space. And kind of they didn't seem to really care that much about the Bitcoin part. I mean, what sort of happened after the acquisition?
Yeah, I mean, I think First Data is a payments company primarily, and they're looking at, they had other gift card-related assets in their business, and then they bought Transaction Wireless in San Diego, and they merged them together, and they just created a bigger gift card company. But I think Bitcoin and crypto was not high on their priority list, and certainly today isn't still.
I mean, I look back at I was certainly we worked together on the PR side for a few projects, and then I of course was a client. I mean, a user, and I now of course look back and say I ended up buying a bunch of Home Depot cards because you had a Home Depot card, and every time my wife was like, "You're looking to like." We did this new redwood deck on the home that we owned at the time, and I think I probably bought maybe I don't know, maybe a dozen of those $500 cards when Bitcoin was around, I don't know, maybe $400, $500. So I now refer to that $50,000 job as being the $1 million job when Bitcoin hit 20,000. But
I got way more stories than you about that.
Oh, I know. I think we all do in this space, right?
Buying gift cards, like we were busy testing, and we had a phone that we lost. Well, actually, we didn't lost. I gave it to my co-founder Mark because he was the CTO. I said, okay, well, we use this phone for testing and whatever else, and they wound up formatting the whole phone and had like at the time, I think probably 70 BTC on it. It was like I remember it was $100 BTC. We lost like 7. It was it was just more than the price of the phone. The joke was, well, you deleted the phone, there was $700 on it, with Bitcoin at $100 a piece. So looking back now, it's like what, 300 grand?
Don't think about it, yeah.
And lots of stories like that.
So, so after Gift, you then went on to do Civic, which initially, and it was interesting because like I sort of pair you and the Brave browser together as sort of a class that was looking for traditional models using Bitcoin and venture capital funding. And you know, you ended up doing both of you did your pre-seeds, your seeds, wanted to use Bitcoin, and then when you went for your A rounds, all of a sudden it's like, well, you know, how many millions of users do you have? How many millions in sales do you have? And then both of you ended up saying, why don't we go and tokenize our model and create a new cryptocurrency? What went into your sort of thought process along from the day you founded Civic to where you decided that that was the correct route to go at the time?
Look, I always think we were going to do an ICO of some sort. I mean, I've been involved in a few. I did Augmentors, we did a couple others.
Augmentors was after though, wasn't it?
No,
that was
before.
before.
Yeah, Augmentors was like January. In fact, I did the deal on Shark Tank South Africa. I think it was in July. Oh, no, we filmed in July or August of the previous year.
That's right. I bought into that ICO.
Yeah. And so you know, that was the thinking around us doing it was there. I didn't expect to raise more than like $3 million or $4 million, maybe 5 max at the time. And when the market totally changed, when we did our order book, we had $100 million when we cut it off, and we only sold 33. No discounts, no pre-sale. The pre-sale was just an allocation pre-sale. It wasn't a discount, a special deal for anyone else. And so at $100 million, we would close the book and say, look, guys, we're oversubscribed massively. And then on the day, we had like 50,000 people in the queue trying to buy tokens. And so it just, you know, for us, it was like, well, we could go this route where we're always going to have some sort of a smart contracting token in our platform. And so it's go that route or go VC. And quite frankly, we already had VC investors, so it made sense.
You're actually one of the very few to pull off having VC investors that went along as a Silicon Valley, you know, centric company with the token. What was your conversation with your board like? And was it just the timing of that that let it happen? And do you think that would have happened if you proposed that, you know, today?
So one of our investors was just totally against it. Probably 2 or 3 were totally against it, and gave me the advice like, do not do this. This is like whatever, you know, regulatory issues, and cited a whole bunch of issues. Said like it's dangerous to the company. We shouldn't do this, etc. And like at that point, like the whole notion of an ICO was very foreign to most people because we started discussing it with our investors, but in April because we announced it in May, and in April. It wasn't really prominent yet, but they all thought this was a legal minefield. And I think we did a really good job navigating that minefield. And by the time we actually went out, it's seen as one of the cleanest, I think it's the cleanest ICO that anyone's done to date. Just the way it took, no investor we had like 40 investors in the company. No one got a discount, no one got special treatment, everyone got maxed out. We maxed, like every external investors are the same as, like everyone got treated fairly equally, no discounts. And that's why the token price has stayed above 10 cents. It's actually a very good floor, even when the markets are really down, because nobody bought tokens below 10 cents. And we still locked up all the company tokens. I don't own any tokens personally. I didn't buy any. I don't trade them. Like, we don't do any market making. We've had tons of market making companies come to us and try to get us to do market making with them. We don't do that. It was just free market economy. You know, I'm a free market capitalist type of guy, so the market is what the market is.
It's just another tool to let you grow your company and have sort of a stable, sustainable growth.
I'd say it's a tool to, when you're building distributed systems like what we're doing, so things have changed a bit in the company. So we bought identity.com. So we're basically, the tokens actually power identity.com, which is a decentralized, we're trying to make a decentralized ID verification hub. So companies can buy and sell and trade data with consumers, enabling them to use and own their data. And these tokens power that now. So we've separated the use of the tokens and how it's delivered from Civic. So CVC tokens power identity.com going forward, and that launches in Q1. So it's been great that and there'll be an open source foundation set up, a non-profit foundation set up, and 1/3 of the tokens goes into the foundation for making sure that things take off and there's market liquidity for them.
Now, Civic, the concept, the name, How has that evolved in terms of just, kind of being able to use this as a identity token that could be used in elections and
That was the original intention for Civic. We wanted to build a voting platform using Bitcoin, actually, and preventing double spends, same as preventing double votes. So you could effectively vote, send all your tokens to it. We were looking at the Color Coins protocol at the time, send all the tokens to an address, and then that would be, whatever, a Democrat vote versus a Republican vote, and you couldn't have, cross-contamination or double votes. The reality is that trying to get voting systems into governments is just a very long, tedious process, and for most startups, it's not a profitable one. It'll take years. And we decided this wasn't a good short-term strategy, so in the short term, we built an identity layer that allows you to enable those types of systems in the future, but does the hard work of verifying who people are and giving them a set of private keys on their device and moving us away from username and passwords, because when one set of credentials gets compromised, then it compromises any other service that uses the same credentials.
So would you say your biggest market today is user security? Is it KYC for investing? What are the markets that you're really going after for, people are saying, oh, tokens aren't used for anything. Well, yours are. So what are they used for today, and where do you see the biggest near-term growth?
So up until now, we've been powering a number of ICOs, and these companies have to deposit tokens into the platform and use it to do the ID verification, so it's KYC, AML, etc. The biggest use case of our tokens actually hasn't been announced yet. So we have some things we're working on with some partners, and that'll be out next year, but we think it's pretty big. We've got a couple of those, and then we've got vending machines as a big strategy for the company. So if you were at Consensus in May, you would have seen the Budweiser vending machine, which has beers in it, obviously, and you could verify you're over 21 using a Civic app. So you scan your driver's license, do a selfie, we do a facial recognition match the age, and then using a zero-knowledge proof, you could tell the machine that you're over 21 without revealing any other information about yourself, and it pops a free beer. And that's very exciting for us. So we're going quite heavily into that space right now. We have, we're actually selling vending machines. Believe it or not, we've got demand for, in the crypto space in San Francisco, we've got our investors' offices, they're putting vending machines in there. So just to show, hey, crypto beer, right? You can get a beer out of a vending machine. Yeah, and I think that we're looking at obviously weed, tobacco, age-restricted, pharmaceuticals. I mean, like cough medication and I think sinus medication is restricted, so you can only get like one packet a day or a week or whatever it is. And now they can put those into vending machines. Because you watch Breaking Bad, you watch they go to the Walgreens, just buy all this pseudoephedrine or something, and they go turn into drugs.
So cannabis, that's going to be a big market for you then?
Yeah, cannabis is a little different because you have to have a dispensary that has the vending machine in it, unless the laws change. But I think it's more about the notion that if you have a digital ID, you should be able to do digital vending. So you should be able to not have to have someone, like if you think about it today, a lot of just going to a bar and getting alcohol, the background to that is there's a barman who checks that you're of the right age, and there's a sobriety test effectively that you're not like falling over before he gives you another drink. With things like tobacco, there's no sobriety test. It's pretty easy. You're over 21, you can get a pack of cigarettes. And then someone in the audience probably come up with well, what happens if you buy it and give it to an underage? Well, guess what? You can do that in a normal store anyway. So what difference does it make whether it's a vending machine? The real important thing is the person who's doing it is responsible for what happens with it afterwards. And so that's that way we think about it. So these are the areas we're focusing on right now. If you think about the way the market plays out over time, we move away from things that require a human being to check ID or information to a place where you can automate just building entrance and et cetera, et cetera. So that's what we're trying to do. And so because everything we do as Civic runs through identity.com, it requires CVC tokens to do ID verification and exchange of information, and we do it using smart contracts to ensure, like, we're really about data privacy for consumers, and so making sure that your information is private, and because there's things like correlation risk. If you can see who's paying who, or you can see that someone has got an account with a certain bank, there's first of all the privacy invasion. There's also some security risks. If there's a high net worth individual using the system, he doesn't want people to know that. If he uses credentials and says, "Hey, I bank with J.P. Morgan Chase," and he gives it to a company that wants to just verify maybe his salary or something, but now that company knows more about him and more than he wants to share. And so that's why we use the smart contracts to make sure it's private and secure.
So this, of course, is an investor conference. It's our fifth year doing it. And so I'm going to ask you, the last question will be about the price of Bitcoin, because I always ask that. But, we just went through what could be called the token apocalypse or something like that.
Is that what
If anybody hasn't coined that, you can just say I just did. But I'll Google and see if anybody's said it yet. But Bitcoin price is down from whatever 19 to 64. It seems to be, I think, quadruple, quintuple, sextuple bottom. I think we're pretty good there. But there have been many tokens that seemed hot at the time that are down 95, 96, 98%. And yet they've changed nothing in their business model. In fact, in some cases, they're already kind of shipping products, so to speak. What do you see as sort of the factors on supply, demand, liquidity that drove this? And do you see any of them changing anytime soon? Because again, you do have two funds that we'll get into in a second that do at least partially invest in tokens.
Look, let's just go back a sec. I mean, I think if the whole 95% down, a lot of this stuff was very much at the margins. If you look at like how a lot of these coins were just inflated in December, and if you look at the volume weighted average price of these tokens, they're substantially lower. Like it was Civic's price spiked to like 160 or something, but like there's no volume at those levels. No one was really trading them, and so the look at the volume numbers, it's different. The issue here is what happened in the past 12 months was all speculation, right? There was no real like utility to these utility tokens. Have no utility, so everyone's guessing what these things will be worth in the future. So when you're guessing or you're just speculating on the price, it can be whatever you want it to be. You can buy it up to like $1,000. It doesn't matter. But when there's real utility and there's real base demand for something, you can start calculating what the future value of it's going to be. And I think that's where we need to get to. Now, the majority of these token companies are going to go bankrupt. There's no way, especially a lot of these guys holding on to Ethereum from 1,400 down to 200 and only selling a little bit along the way. These guys are going to run out of money. And I don't know how much time we have, but...
We're good.
Okay. So I've done this talk a couple of times in San Francisco, and it's gone on pretty well. And I've gone through explaining sort of the market fundamentals of the token economy, at least as I see it. The token economy right now, the crypto economy, has got about 50 to 100,000 people working full-time in it. It's a pretty big number, and this is globally. If you do the math around the average salaries and overhead costs of these companies operating, the fiat drain on the system is about $1 billion a month. Now, when I say fiat drain, that's how much crypto has to be sold every single month to fund wages, rent, food, travel, etc. None of these companies make profits.
And also, most of them, unlike a few years ago, when they would pay in crypto or you didn't work there, that's not the case anymore.
Not at all. Not at all. And by the way, like a lot of the stuff we do is, we didn't mention, but I'm a general partner in Multicoin Capital as well. So we look at these trends and this data, and we take a very much a data-driven approach to our investing thesis. And we're managing nearly $100 million right now. So we've been bearish on the market the whole year, and therefore we probably the best performing hedge fund in the space because we shorted and we made sure we covered some good positions. But the data we've seen and we've dug up is that there's about $1 billion a month going out between salaries, and then you add in mining, you add in etc. It's mining costs, operations costs, etc. It's about $1 billion a month, and that means that on a basic, just to keep the price of crypto the same, you have to balance it out with buying power on the other end, because where's the fiat come from? So do we think that there's $1 billion a month with the crypto buying happening? It's uncertain. It looks like we may be in a bit of a holding pattern right now. Maybe the supply-demand curve.
Typically it came from last year. What happened was you had $8 billion worth of hedge funds created, and they basically until it was an automatic like return. How many can I get? Because they all go up, and then I'm selling half, and I still have made a profit. When that stopped in like January, and then just slid down there, all of a sudden, people. There's still, I think this year, 4 billion new into crypto hedge funds, but they're like you said, they're shorting, they're doing arbitrage between exchanges. They're not really at the moment investing in ICOs in this hemisphere?
Yeah, they're providing crypto liquidity. So look, I'm bearish still on the market. I think that the I think you think it's a triple or quadruple bottom. I think that the bottom can still break.
Okay,
I think
Bitcoin.
I think Bitcoin can still go down to 3-4K range. And the one thing that I think would be good about that is that it would probably create a decoupling between tokens and Bitcoin, because right now they kind of move in unison, which doesn't make any sense. And I think as more stable coins are coming to the market and more coins which potentially security type tokens, this decoupling is pretty healthy for the industry. You can't have a situation where the fundamentals of these coins are not judged on their fundamentals, they're judged on what Bitcoin does on a given day. It doesn't make any sense. So if there was yield, you'd have these bots, or you have traders arbitraging the hell out of this stuff, but it just doesn't exist today. So either we go sideways for a long time, or hopefully we go down and there's a nice V-shaped bounce and then we recover. If you look at all the crypto bubbles up to now, and all the, when I say bubbles, inverted commas, the end of the cycle is when you have this like panic dip and then a V-shaped recovery, and then we kind of rebuild and go towards the next, the previous highs. The 5,700 floor hasn't been there's no V-shaped recovery.
That was January 2015, as I recall, the last time, right?
Yeah. So we haven't seen that, and so it kind of has to drop to way below expectations, I think, and that's just based on history of you look at the charts over time.
But you're not selling all your Bitcoin and waiting for that buying opportunity at 4,000.
I think Bitcoin is part of any portfolio. Crypto portfolio is a must hold, so I just think you hold it. I don't think it's going down to zero. In fact, there was a misquote the other day that I said, what I said was, when Bitcoin breaks 20,000, it'll go up to 100K and then tank again, because you'll go through the same cycle again, right? So it repeats itself. And then the journalist said, Vinny says it's going to go up to 20,000 and then tank down to $100. I was like, why would it do that? Yeah. 100K and $100 are two different numbers. There's a K missing. But there's a lot of misinformation about what I actually say on Twitter and elsewhere sometimes. And all journalists.
So obviously you're a master of studying kind of like trends and cash flows and things like that. Obviously the halvings have also to date really had a lot of impact, and I've noticed that we've had twice in a row now, so it's starting to be at least a minor trend where you basically had a parabolic run up the December after the halving. Do you see that happening in 2021 as well, or do you think we're going to have something before that?
I think it's 2020, actually.
No, but 2020 is the halving, so then the parabolic is the year after.
Yeah, so this is the difficult part to predict, because this is game theory now. This is, okay, well, everyone knows it does this, therefore now you have to have like second level and third level thinking in this, and how does it play out. The likely outcome is that people will basically go and expect all the things that happened before with the halving, and so they're going to buy it up, and it'll rise. It'll probably, in theory, it should double in price before 6 months before, like it did last time, and then it's going to go on a run, in theory. The problem is the mechanics are different this time, because the inflation rate is getting so low that it doesn't actually make that much of a difference based upon the free float of coins out there. It had a lot more impact when Bitcoin had 10 million coins or 14 million coins out there, but at 17.5 million coins, the halving is not going to make a big difference. Inflation goes from 4.5 or whatever to 2.2% or something. It's not significant as when it went from 16 down to 8 or whatever it was. So there may be a trap in this, because what happens, we tend to perpetuate the belief that the past predicts the future, and doesn't. And when you change the variables, unexpected results may happen.
I've been sort of saying that it'll do that again, but it went from 300x to 30x, so the next one I expect 3x, and then maybe 1.3 after that.
Maybe. But remember, again, law of unintended consequences. People may behave as if it will happen the way it happened last time, and then certain people will.
So let's talk about external events, ETF, and the next global panic on equities.
So I've been negative on ETF since March last year. I wrote a blog post about why it shouldn't happen and why it won't happen. It hasn't happened yet, and I don't see it happening. And one of the reasons right now I don't think it happens because there's an investigation by the Justice Department, and a few others on Bitcoin price manipulation. So how do you authorize an ETF on something where the government's already investigating it for price, investigating the industry for price manipulation?
Well, they did have a silver ETF after the Hunts were caught manipulating the silver market.
Sure, but this is a little different. I would say this is not it's not the same type of environment, and because it's traded on so many exchanges, etc. The risk is that mom and pops start investing in this ETF, and then the report comes out and says, yes, there was price manipulation, and now who's liable on people losing money? If
well, of course, the only ETF that I think has a chance is the one that the minimum purchase is 25 bitcoins per share.
Potentially, I'm still skeptical that until the regulatory environment is cleared, that Bitcoin doesn't get an ETF.
So then, next global crisis, whether it's Bank of Japan, Euro crisis, corporate bond. There's so many, bubbling crises in the making with that rising interest rates now, possible trade war. What do you think if any of those come to pass and you have a 2008-09 scenario again, or even a fraction of that? What will that do to the price of Bitcoin? Because there's two thoughts. I mean, it's actually, so far, Bitcoin's been dropping when equities drop rather than popping. What are your thoughts?
So I think about this a little differently, I think, to the rest of the people I know. I think that the biggest crisis that we can have would be one that impacts the U.S. the most. So as long as the U.S. is still goes strong, and there is no massive financial crisis, or the U.S. is falling apart, then and so let me preface that. As a result of all the stable coins coming out right now, and sort of USD-linked coins, so Tether's been a good example, but a bad example. But if you go to other parts of the world, and just for those of you who travel in foreign countries, ask people what they would rather have, Bitcoin or USD, and more likely than not, they'll say US dollars. In many parts of the world, including, I'm from South Africa, but Africa, people actually want US dollars. They want, dollars are prized above Bitcoins. And I know it's hard for the Bitcoin industry to accept this. Crypto, what? Why would you want that? But there are more people out there in the world who are not in the Bitcoin industry than in the industry who understand it. And so in the absence of understanding what Bitcoin is and the volatility, etc., USD is a safe haven. Now, if the US came into some sort of massive, sort of financial crisis or whatever, that would change if the dollar was massively devalued or devaluing every day.
But if it's just the stock market going from all-time highs and
No one
dropping
cares.
30%, they still want dollars.
They still want dollars. And so what's probably going to happen is you're going to see more and more applications right now coming out using Gemini dollars and Circle dollars and Coinbase dollars, and allowing people to store these digital dollars in cold storage and offline and in wallets. And that's a real store of value in the short term. People want to store their money backed by the U.S. economy. And I think people, a lot of people in foreign countries are just comfortable with having, and look, in places like Nigeria and Africa, they're trying to get all their money into US dollars, not really Bitcoin.
So if Deutsche Bank explodes, not going to affect the price of Bitcoin?
Nope. It's, I personally believe that the US economy is kind of tethered, excuse the pun, to Bitcoin, and a weak US economy would lead to Bitcoin soaring, and a strong U.S. economy would kind of keep it in check. Because a lot of the libertarian views, if you think about it, have been the dollar's worthless, right? So there are a lot of views out there that the dollar's worthless. It's a piece of paper. It's been printed by the Fed. It's going to collapse. When that does happen, Bitcoin will go through the roof, right? But until that happens, it's what keeps things in check to an extent.
So assuming no collapse of the Fed in the next 5 years, I think you already said that you think we have a chance of going down to 3,000 Bitcoin. Where are we going to be in 2022 when Tim Draper predicted 200,000? What's your sort of, that's not even 5 years, 4 years.
I don't know.
No?
I don't know. It's this is a real tough one. The one thing I will say is when we do break 20,000 as a upper limit, when we get enough steam to get back up to those levels and break through it, it's going to run. It's going to run probably 100K plus.
Okay. Great. We got time for 1 or 2 questions for Vinny?
Jeez, I came all the way here from Palazzo Hotel. I mean, come on.
Come on, you got the Oracle of Bitcoin here. Yes, in the back.
I've got it. So for it to drop to 3,000, what do you think that the recipe to make it drop would be based off of? Or would it just
it's probably going to be more than likely a flash crash. Depends how fast it, it could just crash down, bounce back up in a day or two, and that would be healthy. But a more systemic sort of bad crash should be one where it doesn't recover quickly. So Tether is one example of a systemic problem. If Tether so who was here when Liberty Reserve got raided? Anyone here? Who was in the crypto industry when Liberty Reserve was taken down by the feds? Okay, so this is one of the problems in crypto. There's a lot of like history here which people who've come in post Liberty Reserve don't really have memories of. You remember? This is like they were.
We actually have.
You can tell the story.
We had Edmund Moy, who actually, when he was the head of the mint, actually was responsible for then the arrest of the person at Liberty Digital, and we had them on a panel at the second CoinAgenda, and Trace was on that panel too, when we sort of did a joint conference with Steve Michaels. So yeah, I mean basically before Satoshi, you basically had a number of attempts to have the same type of decentralized currency, but because you could identify it. They were just like, hey, this is illegal, we're going to put you in jail.
And it took the feds 3 or 4 or 5 years. But when they went in there, like literally your money's worthless. They take it all, they seize the whole lot. And so, as an example with Tether, if the feds ever decided they want to go in there and just seize everything and you got to submit KYC and AML to get your money back, that is like billions of dollars that goes out of the system. That's one example of things that can go wrong. There's many others, exchange hacks, et cetera, et cetera. These things can impact the price. But then the other thing is just a basic fundamental case where Bitcoin is the #1 fiat gateway for crypto, without a doubt, right? If you want to get fiat out, you want Bitcoin because it's liquid. And so when you have this like pressure of thousands of companies and hundreds of thousands of people, or probably let's call it 50 to 100,000 people is the number we've got, that require $1 billion a month in sales, the pure selling pressure that gets applied to the faucet, the fiat gateway Bitcoin, could result in the price dropping below those levels that we're seeing today. It just may not be sustainable. I don't know what that number is. If you look at the wallets of the top 50 companies, they're all sitting in Ethereum right now, the ones that are ICOs. And if they pull out through Ethereum, then there's going to be an arb between Ethereum and Bitcoin. If they convert to Bitcoin, Bitcoin may rise for a bit because of the buying, but when they eventually sell it to get into fiat, then it'll drop. So while the industry's sitting on a lot of crypto, and the cash reserves are being gobbled up, and I think a lot of companies have this cash buffer, so they've sold crypto in the past 6 months or a year, and they've been using it up and waiting for the market to recover. And the longer it takes for this recovery not to happen, the more likely it is for it to drop another leg down.
I was going to ask you, I will ask a question about Ethereum. So will Ethereum, when it goes to proof of stake, and just over the next couple of years, there was a piece written by someone from Stellar that basically said it's going to go to 0, and and actually dropped just because of that piece, because Vitalik didn't, I think, respond properly, saying no, they're not going to go and make buzzword coin and make Ethereum useless. But do you see problems ahead for Ethereum, or do you think that because it has the most developers that 5 years from now it'll be worth more than it is today?
Hard to say. I think that Ethereum's got a lot of competition. Bitcoin has actually very little competition. It's got Bitcoin Cash and Bitcoin. Those are the two competing for the payments world. Ethereum's got like everyone on their doorstep. And the scaling issues are real, and it's problematic.
Technically you have Dash maybe competing with Ethereum, and maybe...
Yeah, you've got EOS, Dash. Well, Dash competes more with Bitcoin, I think. Yeah. So with Ethereum, you've got EOS, you've got Stellar, you've got... I actually invested in a company called Solana. I think they've got a fantastic solution. I think they've solved the scaling. They've solved layer 1 scaling, in my opinion. But all this stuff is very nascent. Ethereum's just really hard to build on. People are struggling with it. And then if you look at Augur, I think one market takes up like a third of the whole block for Ethereum, and they create a new market. So.
And thoughts on where Rootstock and Chia, sort of new projects.
Chia, I see too many arbitrage opportunities in Chia. There's just lots of we can arb this against Filecoin and AWS, maybe. And looks like there's you could do a lot of manipulation and manipulative arbing. Jury's out. I would say I don't know too much about it. I know enough to give an opinion that I'm slightly neutral to slightly negative on it, but who knows? Brahm's a smart guy. He could figure out how to make it work, but it doesn't seem obvious to me. And what's the other one? Rootstock, the guys are super smart guys. They've been working hard on it. We wanted to build on Rootstock since we did our ICO, but they're not ready, so we have to keep going. And eventually, when they are ready, we'll try and move across if it makes sense.
Thank you very much.
Thanks, guys.
Vinny. Okay, and we are now we always put the lawyers panel at the end of the day so nobody leaves too early. So Leo and everyone else.
Manny and Joseph Cutler and Ryan Munn for the update on ICO laws and regulation.